You pour it out, okay? That's called hot in the pot. Now this is a special blend I got. It's got like chamomile and rose hips and some other little special ingredients, and I'm not gonna tell you on camera.
My question was, what's your take on the financial crisis?
Oh. I just think they ran out of money. I should probably just print more. I don't know why it's been such a big issue.
This is a special precious metals update from SGT Report. Guys, I wanted to begin with that humorous scene from HBO's Veep because I think it reflects the sum total of the uninformed masses' understanding of the financial crisis and the Federal Reserve's operations.
I should probably just print more. I don't know why it's been such a big issue.
But as Willem Middelkoop, author of The Big Reset, Gold Wars and the Financial Endgame, well knows,
Plan A, the current financial system, will end. We can't go on this way.
Guys, it became very, very clear after the 2008 crisis that the European Freemasonry arm of Goldman Sachs, as France 24 once put it, placed a network across the EU with Mario Draghi at the head of the ECB snake. Draghi was employed by Goldman Sachs from 2002 to 2005 before being placed into power as the governor of the Bank of Italy until 2011, when he then moved on to helm the Rothschilds' European Central Bank and enslaved Greece to unrepayable Goldman Sachs-fostered debt. Now, Le Monde and France 24 alerted the world to the viper-like corruption and reach of the criminal international banksters.
What's extraordinary is that the Greek Central Bank was, I suppose, complicit with Goldman Sachs in concealing the true extent of Greek debt. And you had Lucas Papademos at the head of the Greek Central Bank at that time. You've also got this guy, a former European commissioner, an Irishman by the name of Peter Sutherland. He helped to place Mario Monti, who is now the Prime Minister, at the head of the Trilateral Commission.
You helped start the Trilateral Commission, and you've been to the Bilderberger groups.
So what you're seeing here is a list of names of people who have very close associations with Goldman Sachs, who have very senior positions, either in central banks or at government level in several different European countries.
So Goldman Sachs, Freemasons, all linked together. The governments don't rule the world. Goldman Sachs rules the world.
But as usual, those warnings fell on the deaf ears of a neutered, sleepwalking public. And as the new WikiLeaks Hillary Clinton email dump proves, the Mockingbird mainstream media in the United States is colluding with the international bankers to place the puppets of the bankers into power all over the world, including the White House. As SGT Report readers know, Hillary Clinton is Rothschild's choice for president, as their $100,000 per head fundraiser for Hillary recently proved. These criminal international bankers are implementing their plan to enslave all nations with Rothschild-owned central banks to unrepayable paper debt. However, with China's move to creating the Shanghai Gold Exchange, we can see a quantifiable changing tide from confidence in paper to confidence in physical precious metals. As my recent guest David Jensen noted, the Japanese too have recently sent physical gold shockwaves around the planet with the implementation of physical gold trading at their Tokam Commodity Exchange.
Japan's in an interesting neighborhood there in Asia because their neighbors are moving towards physical metals. And it was interesting there to see, as I mentioned, the Tokam moving to a physical settlement contract, both for spot and for forwards.
As Dave Kranzler explains, the news of this event was largely muted in the Western financial media, and even the alt-media blogosphere largely seemed to have overlooked the news. But this is a highly significant development because it signals a subtle shift in Japanese economic and monetary focus from west to east. It will also create a big upward price readjustment in gold and silver. The significance of Japan's Tokam exchange shifting from all fiat paper contracts to a physical gold trading and settlement operation is reinforced by the fact that 2 days ahead of the announcement, Tamaka Group, Japan's leading precious metals trader, refiner, and manufacturer, acquired Swiss-based Metallor Group, one of the world's largest refiners and suppliers of precious metals-related products. Furthermore, in March 2015, Japan's Asahi Holdings, a collector and refiner of precious metals, closed its acquisition of Johnson Matthey's gold and silver refining business. JM is one of the leading producers of refined precious metals products, including LBMA quality 400-ounce gold bars. And as David Jensen notes, if there was reasonable expectation for supply and delivery on demand of physical gold at the bullion banks, there would be no reason for Japan to have made these moves. Which brings us to negative yielding bonds and the looming bond market blow-off, which J. Michael Oliver at Momentum Structural Analysis is currently predicting. In this excerpt from his June 10th T-Bond Futures Update, Drama Ahead piece, he writes, "Negative rates or near zero rates are beyond the pale, but then unreality can persist longer than most think." He goes on to say, "The sane know that negative or near zero rates are not natural market pricings. They are due to government central bank policies, not free exchange in the debt markets, and many now recognize that those pricings are generating and accumulating massive real-world distortions, real time bombs. But sometimes, in order to get absurdity to unravel, requires taking it to a level beyond the absurd. In technical terms, it's called a blow-off." Guys, with $13 trillion globally in negative yielding bonds, the smart money has been moving into precious metals and related mining stocks. But here's one extremely important detail that many are missing when it comes to Wall Street money and the precious metals.
Central bankers are quite afraid that too many people will start fleeing towards gold. So that's why pension funds are not allowed to buy physical gold. I'm a fund manager myself. Within the permits we have, we're not allowed to invest in physical gold, only in financial products connected to gold.
Some of the biggest money on Wall Street is disallowed by law from investing in physical precious metals.
We're not allowed to invest in physical gold, only in financial products connected to gold.
So ultimately, where will that money go? It will go to ETFs and other gold-related paper products like mining stocks. We've seen the move in mining stocks this year, and it's telling us a clear story, as I stated in my recent interview with Brian Slesarchek, the president of K92. Now guys, as I've noted in a previous disclosure, I've just started to wade into the mining stocks a little bit with a recent purchase of First Majestic Silver AG at $16.30. I also bought First Mining Finance, and as I stated in my interview with Slesarchek, my initial purchase of K92 was 1,000 shares at 77 cents, and I stated in that interview if I bought more, I'd make that disclosure. I bought more today around noon, and I paid $1.48 for 1,600 shares. And it appears I'm in good company. A press release today from K92 yields some very interesting information. A $2 million investment into K92 closed today, and the sole investor was Ross Beatty, a legend in silver mining and the chairman of Pan American Silver. We will continue to monitor the situation, and I will provide updates. I'll leave you with this juicy nugget from Willem Middelkoop. God bless.
The physical demand by just two countries, India and China, is 3,000 tons a year. That's the same amount as worldwide gold mine production. The London gold vaults, we know from the gold analyst by Bloomberg, Kenneth Hoffman, that the London gold vaults are virtually empty. He told us a year ago. From the latest research, we know over 2,000 tons of gold left London gold vaults. They were all refined in Switzerland or went to the east. I always tell listeners that when China wants to have the golden eggs, I want to own the chicken who can produce the golden eggs. And who are these chicken? That's the gold companies. So selling shares in gold miners now is the most stupid thing you can do, because they're the only ones who have ounces available when there really is a shortage.